Hello and welcome to BQ Prime. You're watching Talking Point, and my guest today is Nischal Maheshwari, CEO Institutional Equities at Centrum Broking. Nischal, thank you very much for joining us on BQ Prime. Let me begin with the hot topic today is about the oil crossing the $95 mark. It puts every calculation of earnings and everything into a different spin as oil continues to be strong. What is your view on how earnings are going to be impacted as a result of this crude inching about 95?
Morning, Sajid. Thanks for having me on the channel. I think, yes, it's a worry basically for India as a country. But earnings, if you really look at it, basically we are not earning oil heavy as far as Nifty 50 is concerned. 40% is banking, another 20% is IT. So that way, basically, 60% more or less basically has very little impact directly on the earnings. So I don't see much issue as far as earnings is concerned. Oil and gas is the only sector, and it is going to be a beneficiary. And then there is going to be some impact basically on the consumer companies because their packaging cost goes up. So I do not see much earnings impact basically, but overall, yes, I think it is bad for the inflation in the country, and that's going to have an impact basically overall.
We saw the first two quarters been relatively strong for many of the companies across board, across portfolios of many of the investors. Uh, how do you think this is going to play out in the second half of the year? Uh, we are about to close the second quarter as well. What is your view on the second quarter as we look?
So we continue to believe that this quarter is going to be strong. Earnings are going to be strong because it's going to be largely driven by the banks. Banks is still having a very good Goldilocks scenario basically, and there is still good growth on the credit side. So I think banks seems to be doing well. I think IT will be a bit of an issue basically because they may disappoint again. But consumption is where we believe basically there is going to be a good, strong earnings growth. And you have to keep in mind basically in the last two quarters, we have seen the commodities going down. We have, for the last 4 months now, we are seeing WPI going into the negative. I think that is all to show up into the earnings growth of the various companies. So I believe basically this quarter is going to be good, basically.
Mhm. I was looking at the banks as well, as you mentioned that banks have been robust, especially not only from a returns point of view, but also the earnings which is coming in. Uh, how do you see that sector? And within that sector, is there a play that you prefer?
Yes, obviously, I think overall banks will do well. So we like a bit. So we are also of the opinion that the third quarter and the fourth quarter is going to be good revival in the rural economy, and we have already started seeing through two-wheelers growth, FMCG growth. So I believe one of the sectors within the banks is the MFI and the SFBs. So that is one space basically which we believe is going to be a big beneficiary of this, and that is the sector basically which we are pushing, saying that and the stocks, most of them seem to be cheap in that sector at the moment.
Hmm. Uh, I think there are two things which you started initiated coverage. I think Aptus Value Housing and Home First Finance. Uh,
Yes.
how do you see this particular segment and these companies? What makes you so bullish about it?
So I think that whole space is very underserved. If you really look at it, basically this sector, this space, banks do not want to go. This is less than 25 lakhs kind of a ticket size. So banks really do not want to grow. So if you look at it for the last 10 years, the 25 lakh plus space has grown at almost 17, 18%, whereas this space, less than 25 lakhs, has only grown at around 11%. And if I look at it, last 5 years, it has actually grown only 6%. So I think there's a huge space basically which is available right out there. All these three companies. So we've initiated Avas also along with Home First and Aptus, and all the three companies are growing at around a 30% kind of a CAGR. ROA is of more than 2%. Aptus is actually 3.5% kind of an ROA. The other two is also close to around 3.5% kind of an ROA, and an ROE is of around anywhere from 20 to 30%. So with a 30% kind of growth, I think yes, all the three stocks are a bit steeply priced, but with this kind of a growth, we believe basically that's a good space to be in.
Mhm. Um, do you see asset quality as good as other players in the segment, bigger ones and the mid cap?
Yeah, yeah, I think all of them in the last 5 years also basically their asset write-offs and asset quality has been as good or better than the larger home finance guys.
Mm-hmm. Within the, you spoke about IT briefly, and you continue to see a bit of a disappointment in Q2. That's what you indicated for IT. But we've seen some fund flows coming back into IT. Do you see, this is just a transient phase, maybe a quarter or two before it again comes back?
I think so. I think for the moment, yes, IT may be a bit subdued. But what we have to see basically, the IT historically used to get impacted whenever US slowdown used to happen, when it was a one-to-one correlation. But now I think with this digital phase starting from the COVID time, I think most companies have to necessarily go out and change their outlooks basically and become more digital, more customer facing. So they have necessarily been spending money on the ITs, whether they are doing well or not. So I think that transition is still not completed as yet. So we continue to believe basically that the demand will be there. Second thing is with the labor shortage being in the US, the labor arbitrage would be still bigger with India. So I think these two things will continue to drive IT.
Okay. On the consumption space, is there a specific segment or sector that which you like, and is there any headwind that you see? Inflation being one of them, and at least commodity crude inflation, will that have an impact going into consumption? Because we all are basing our growth rates based on revival of rural in the second half, and the festive season, which is is in the second half. So, is there a challenge which is coming up?
So I'm saying there, from the issue as far as oil is concerned, I don't see directly a challenge, except for that inflation might still be able to hold on to higher. And if the government passes on the full this thing, but you have to keep in mind that this is being now 6 months is going to be major elections there. So I think some of this is going to actually, I believe, is all these price increases will get absorbed by the government for the time being, and that's why this it may not come to the end consumer, and inflation may continue to remain wherever it is. And that's why I continue to believe that it may not impact the consumption or the festive season.
Uh, you know, Interest rates is also playing a big role. What is your view on it? How the rate cycle is going to turn around? There was a view that by the end of the year or early next year we will see a reversal in rates. Do you still continue to hold that view?
No, I don't think so. Basically, we are going to see any rate cuts till the second quarter or the end of second quarter of next year. I'm saying calendar year. So I don't believe basically we are going to see any rate cuts till maybe early June or types next year, and higher for longer. What we are seeing in the US and the world, I think India will have to hold on. Because yes, India has not increased rates for the last 2 quarters, but we are not so decoupled that we can start cutting rates when the whole world is still holding on or increasing rates. Because I think that will put a lot of pressure on the currency, and I think we'll have pressure then if the currency starts going down. Then obviously the inflation, you start importing inflation. So I think it's a very complex thing. So I think government will hold on to the rates, and maybe once US starts easing out, I think we will also start seeing easing out here.
Mhm. Do you, in your opinion, how do you see flows coming through in the next couple of months or quarters? We hit all-time high 20,000 and Nifty, then retraced it. And we lost around 500 odd points from there. And then, do you see Nifty to be a range bound going forward in for the next 6 to 12 months?
So 6 to 12 months, my view remains to be that I think we will hit a new high in a 12-month time frame. But immediately, I think for a quarter, we have to just wait and see how the yields pan out in the US. I'm very sure basically we are not looking for any further rate hikes in the US because I think the inflation and everything is on a easing path in the US. So I do not see any rate hikes, but I think higher for longer will continue to put pressure on the yield, 10-year yield in the US, and thereby putting pressure on the Indian currency. And that may create a bit of a problem for us for the flows to come in. So maybe this quarter is not going to be a strong flow as far as FIs are concerned, but domestic is still going to be good.
And you see enough, triggers for that new high to be hit?
The biggest trigger is, Sujit, is the earnings growth. Next 2 years, basically, the market is actually uh, uh, actually projecting an earnings growth of almost 19% CAGR. Now, if I assume basically there will be disappointment and maybe it will come to maybe 12, 13% kind of a number also, then also in that kind of a scenario, we are saying that we are at around 20 times 1 year forward, which is not a very aggressive valuation. Historically, we have gone 23, 24 times. So I believe basically that number should go back to maybe 21, 22, which should lead, I'm saying 10% growth in next 2 years, 10% each. So that's what my target, that's what my thought process remains to be, that by the end of next year, we should be at 21,500 Nifty.
Okay. Within the Nifty, how do you see the Nifty EPS growing this year? Have you made some changes given the fact that things have changed in the last couple of months, or you're still holding on to the growth rate of Nifty?
So we are still holding on. I think this year is mostly is going to be in the bag. What changes will happen basically is likely going to happen next year.
Mm-hmm.
So I think this year, definitely we are looking at a 15% plus kind of a number for the earnings for Nifty.
And do you see any kind of impact because of the coming state elections or elections early first half of the next calendar year? Some kind of consumption led or infra led push coming in that will be tailwind for the economy.
So I think elections historically has been positive for the economy. If there is no changes at the moment, doesn't seem to be there is going to be any major change happening in the 2024 elections. So if that continues, I think continuity of the policy happens. That is very, very positive for the investor for another 4 or 5 years. And elections typically tend to show a lot of spending by all the political parties involved. So I think that's going to be overall be good for the economy.
Nishal, you interact with a lot of institutional clients. We have the National Stock Exchange also looking at extending index derivative trading to evening. You head this institutional equities thing. I want your opinion on it. How do you see this?
I don't think so. Extending hours is going to help us basically because there is very little participation from the international clients in the Indian derivatives market. So if we are assuming saying that it's going to be daytime there or something like that, then it's not going to help us. So I think the best thing is basically this is a long enough time time period. Otherwise, the fatigue sets in. So in between now also, if you really see basically from 11 to 1 or 11 to 2 or something like that, or 12 to 2, the trading volume is much lower than the other hours. So I think somewhere people, somewhere basically extending these timelines is not going to help.
Mhm. But as an institutional equities broking arm, are you ready to do that if it happens in the next couple of months? I mean, they will be. I'm told that exchanges will give a couple of months for all the participants to be ready. And the feedback from some of the institutions which they have been speaking to is that they would like to have some window in 6 to 9 p.m. Band.
So we have to see basically if 6 to 9, because then that 6 to 9 can be maybe largely be retail, or if it is institutions also want to participate there or not. Because then 6 to 9, they also need to have a whole bunch of next staff to actually take orders, place orders, and settle it. So I'm saying that is going to be a challenge. Yes, I think systems are there. System is not an issue. Basically, what we need to get is another set of people to come into the 6 to 9 time frame. That's all.
Mhm. Nishal, before we end, is there any disclosures that you want to make?
So I think what all stocks which we have to spoken about, though I don't remember talking about specific stocks, but I think we have been recommending these stocks, and clients will be holding in their portfolio. Some of these stocks may be personally held by me also.
Thank you, Nishal. It was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you.